Welcome everybody to our update for the first quarter 2022 on operational results and KPIs. All our infrastructure has posted excellent growth compared to last year, both in traffic revenues and EBITDA. Our infrastructure in the US, our toll roads, all of them show accelerated growth. When we look into traffic in more depth, in NTE and 35 West, we're seeing traffic quite beyond pre-pandemic levels. LBJ is catching up, still short, but it's catching up quickly. In terms of revenues and EBITDA, all revenues in all our roads in the US are well above pre-pandemic levels. The area, Dallas-Fort Worth, is growing a lot. And also in North Carolina, we're seeing good growth in the economy. Inflation is a good tailwind, and we managed to adapt tariffs even further from inflation. In Toronto, we are seeing also good growth in traffic and revenues and EBITDA compared to last year, but traffic is still below pre-pandemic levels. And in general, in the area, we are seeing that employers are not asking people to return to the office. I mean, the presence in offices is at 20% level. And that lack of mobility means that still there's few congestion and the traffic is slowly recovering. In terms of economy, the area keeps receiving investment and development that should help growth in the future. Moving into airports, Heathrow also showed an excellent end of the quarter with the Easter season ramping up. And here we are seeing also updates in traffic. Heathrow has announced that the expectation for traffic is higher than some months ago. So we are seeing healthy recovery. Of course, all this with the uncertainties of the prolonged war in Ukraine and the economies may be stalling. But so far, the performance looks for a higher traffic. Moving into construction. In construction, we have headwinds, tighter margins than in the past quarter in 2021. And this is because inflation is affecting prices of commodities, and also there's a lack of supply. So the margin is like 0.8%. And the last update will be in terms of net cash position that holds similar levels to the end of the year, with some divestments of services around 170 million being cashed in, but also we're buying back shares north of 110 million euros. So it's a good cash position held by good working capital in the first quarter of the year. We could see some pressure on cash generation going forward along the year. Thanks, and we'll keep updating the market with the developments in construction and our infrastructure.